Good morning, and thank you for joining us for our webinar on the future of retail banking. Before we kick off, a couple of quick notes. After the webinar, you will be directed to a feedback survey. It takes a few seconds to complete, so please do so. We really do appreciate your feedback. This webinar is also being recorded, and afterwards, the recording will be shared with you. Once again, thank you for joining us, and I will now hand over to Abbas to introduce the session.
Good morning, everyone. Thanks a lot, Renee. For those of you who don't know me, my name is Abbas Pastray, and I oversee the financial services practice for KPMG Lower Gulf, where I've been based for the last 10 years. I'm also joined by my colleague, Gonzalo, who leads financial services management consulting for KPMG here. Look, first of all, Gonzalo and myself would like to thank you all for taking the time to attend our Future of Retail Banking webinar. Needless to say, I hope that you, your families, and colleagues are all safe and well, and we are hoping that the economic rebound will be swift as the UAE implements its outstanding vaccination program. So as the industry adjusts to the effects of COVID-19 and looks towards the future, the retail banking landscape has undergone considerable transformation. Banks must negotiate a multitude of shifting factors, from changing customer behavior to economic headwinds, intensifying competition, regulatory pressures, and obviously technological disruption. But while there are challenges, changes also brings opportunity. Banks that can drive a differentiated proposition, which is putting customer experience at the heart of everything they do, connecting it across the enterprise, have the potential to secure a significant competitive advantage. Look, we have a packed agenda today. We will first take you through some insights from our recent Future of Retail Banking thought leadership. Next, we have a couple of panel discussions on future of banking and empowering connected banking with our guest speakers from banks and Microsoft. There is a lot that we want to talk about, but equally important is to hear from you. So please keep your questions and comments coming in the chat box, and we will try and address them as we go along. Look, I'm honored to have an esteemed group of panelists join us today to share their experiences and, more importantly, how they see the future landscape of banking. None of them need any introduction, but I will try and do justice to it. We've got Yuri Misnik. Yuri is the Group Chief Technology Officer at First Abu Dhabi Bank. He has over 21 years of experience in technology, working at HSBC, Microsoft, AWS, and National Australia Bank, working across the globe. Yuri is a business-focused, pragmatic, senior technologist with a passion for cloud, modern IT strategy, delivering value for business, and big data and AI. We're also joined by Subroto Som. Som is the Senior Executive Vice President, Head of Retail Banking Group at Mashreq Bank. Som's got over 30 years of experience across all aspects of consumer banking, wealth management, commercial banking, and business management in more than 30 countries across Asia, Middle East, and Africa. Prior to joining Mashreq, he held senior positions at Citibank and Standard Chartered. We also have Sunny Zulu. Sunny is the Head and Managing Director of Retail Banking Business at Standard Chartered Bank UAE. He is responsible for driving wealth management, retail products, distribution, branch banking across priority, premium, personal, and Islamic segments. Prior to this role, he was the Regional Head of Strategy, Transformation, Alliance, and Performance Management for Africa and Middle East at SCB. We also are excited to have Yasar Yilmaz. Yasar is the Head of Financial Services for Middle East, Africa, Turkey, and Israel at Microsoft. He's a digital transformation strategist specialized in financial services industry with over 20 years of experience. He's a design thinking-led innovation practitioner and a blockchain enthusiast, striving to help C-suite members grasp strategic value realization. I would first and foremost like to take this opportunity to thank all of them to attend our today's webinar and looking forward to the exciting discussion. So to get started then, a month ago, we launched our new thought leadership, the Future of Retail Banking. And I'm delighted to have Adrian Clan join us to take us through some of the insights from the report. Very quickly, Adrian heads up the customer advisory practice for KPMG in the UK, focusing on helping organizations identify customer revenue growth strategies and leverage digital to create a modern customer-centric organization using agile development approaches powered by cloud and mobile technologies. Over to you, Adrian, to take us through some of the findings coming out of our report. But as we do that, Renee, why don't you play the 1-minute video that we have for our audience today?
Hello, thank you, Abbas, and hello everyone. My name's Adrian. It's great to join you today from the UK. Thank you for the invitation. I'll just spend a few minutes giving you some highlights of this research, which will be available to you through Abbas and the team, and hopefully some interesting topics that the panel might also pick up in a few minutes. We regularly look at the future of various industries, the future of insurance, the future of retail, the future of consumer goods. And as Abbas mentioned, we looked at the future of retail banking over the past year or so. Frankly, we started that work before COVID and found some interesting acceleration to some of the trends during the pandemic crisis. Obviously, we look at lots of different signals of change, we call it. We all know that the customer has totally changed their perceptions of many goods and services. We're finding banks need to be much more connected to people's lives as they're dealing with this, the fallout of the pandemic. Customers are looking for brands that empathize with them, that understand their situation, that are personalized to their environment. Sure, it's table stakes now to have a digital first strategy and to effectively engage them digitally. You have to, but there's an emotional element to that that's creeping in more and more. We're obviously seeing the continued rise of digital banking, neobanks, etc. But it's shifting now the tectonic plates, we think, of large universal banks, which I'll come on to in a minute. Now, obviously, the economy around the world has been hit hard. Obviously, that varies greatly by country. In the UAE, there may be some cushioning to some of that some of the European economies have struggled with. But many of our customers in retail banks are struggling to make their bills, to make ends meet every month. And then some others are saving more than ever, and their personal balance sheets are stronger. And we may well come out of this. Some people are predicting with a 1920s style boom of consumer spending in some months ahead. And let's hope that happens. And regulators, no doubt, in every country have played a huge role in stabilizing the financial system, in providing liquidity to businesses through the banking sector. And that will be here to stay in most economies. We won't be weaning ourselves off that sort of interventionist approach. And some people are talking about the shift in capitalism towards a more of a stakeholder-based capitalist approach. And last but by no means least, technology, of course, is fueling all of this change. It's the adoption of this consumer grade technology, whether it's mobile banking, whether it's payments technology that's seamless, or IoT and blockchain. All of this technology is driving fundamental change, and we know that to be true in retail. So what does all that mean? We obviously look at all business models, and in retail banking, there are 5 or 6 big business models that we look at, from universal banks to digital wallets, payment providers, and the like. Our hypothesis is, over the page, Renee, if you would, We think that it's going to shake down into 3 business models. I'm not going to go through the fine print of this. You'll see this in our research. There will still be a role for universal banks. So those of you in the very large universal banks, you might think, oh, well, that's obvious and that's good news. But we think that they need to change radically. And they are, of course. Banks need to be much more data-driven, much more personalized, using that data about customers, about life events of the customer, about their needs, their family's needs, so that they can get inside the mind of customers and help them with their everyday banking, everyday transactions, predicting their life stage needs, etc., and being there as a partner in a much more personalized relationship that's digital first than ever before. So some of these lessons for universal banks come from smaller banks, and we see that trend accelerating. In the middle, we've got transaction-based banks, and these could be the neobanks themselves who are handling some of the everyday payments, could be international transfer funds services, travel money, etc. What we see here is a growing up of this sector. Some of the valuations of these fintechs are very high and are predicated on future revenue streams that are yet to be proven. We do think there'll be a shakeout, and some of these transaction banks will need to get very comfortable running very lean operations, because the value pools they'll enjoy will be high volume but low value. So we'll need to have very lean and efficient transactional focused everyday banks. And then last but not least, we've coined the phrase ambient banking, and what we mean by that is, if you're familiar with the term Internet of Things, you know that everything's getting connected to the internet, and payments will be democratized through that process. Obviously, just think about when you get out of the Uber. When you get out the Uber, you pay. You didn't know you paid. Obviously, the driver knows you paid. It's seamless and invisible. When you change lanes in the car in the future in an autonomous vehicle, you may pay to be in the fast lane rather than in the slow lane. Your devices will buy things for you according to rules. So the money shift the profit pools will definitely shift towards, in some cases, ambient banking. We look to Asia for the future of those business models, for Ant Financial, WeChat, etc., the social media based banking giants, and obviously there are some regulatory pressures there facing them. But that's an interesting model that's going to hit Europe and possibly the UAE. I'm just going to go to one more slide to provoke some of the things that we think are important. We do a lot of research with Forrester about what it takes to be a really successful digital transformed customer-centric bank. And our research over hundreds and hundreds of digital transformations points to these 8 things around the box here that really build up a customer-centric bank. So this is the what you need to do, in our opinion. And then later on in the session, you'll hear from others talking about how. Just briefly on a few of them: being insight-driven, having a data lake, having an Azure environment. I noticed my Microsoft colleague will speak shortly. Having a data environment that allows you to personalize actions and drive your bank strategy. Innovating around the customer quickly using that design thinking. Obsessing about experiences across every channel, personalizing those experiences, making them contextual, orchestrating digitally those experiences. We are in an omni-channel world, but the call center environment is becoming far secondary to an app-based world. So think about augmenting digital first channels. The front office of banks we call seamless interactions and commerce, all the channels joined up together. We think operations need workflow and automation to make them lean and efficient in a modern customer-centric bank. Think credit decisioning, automatic mortgage processing, etc., automated through platforms like the Microsoft Power Platform, etc. Last but not least, the bottom layer engages our people. And of course, we're all connected now digitally. We need to train our people. We need learning platforms. We need agile change programs. We need to engage our people in the future, all on the same digital platform, and probably using an API integrated partner network. We need to be thinking outside the box of our enterprises to a partner network, creating a platform type business to serve our customers' needs. And that will involve APIs and better partnering and so forth. So just a few highlights. Our research says if you do all these 8 things and build digital technology into all of them, you're twice as likely, more than twice as likely to succeed. So there's some food for thought there going very quickly. This is available in the research. So Abbas, gone very quickly there, but I know your time is limited. So back to you for the next step.
Sure. Thanks a lot, Adrian. You've definitely left us with quite a few things to think about, and probably best way of getting into the panel discussion with our 3 esteemed guests. It's interesting. You talked about customer technology, competition, how things are changing. So we all know sort of the COVID-19 has accelerated consumer expectation and shifted priorities. At the same time, we talked about new neobanks coming up, unburdened by the legacy technology and operating with sort of greater agility. Neobanks are able to offer personalized experiences. Yuri, maybe if I can come to you first, how are you seeing banks and more specifically Fab reacting to this?
Thank you, Abbas. Can you hear me?
Yes, we can.
Hello?
Yeah, we can.
Okay, wonderful. Thanks. That's a great question. And look, I think there are a few things which the banks, the sort of legacy banks or incumbent banks need to make work. I think one of them is to get our house in order. And it effectively means, all these things which drags us down, regulation, controls, legacy, etc. We need to optimize that and to pretty much start thinking about all these back-end processes as a software. Optimize, automate, think of controls as software, think of regulation as software, and make sure we can remove this dragging thing, reduce the cost, and improve our own efficiencies, right? But most important, think about the customers. Sort of what we're thinking we're getting into sort of this super relevance era, right? So I don't want to call it super personalization. I want to call it super relevance. That means we need to be providing continuous in the moment insights into our customer financial life, right? And this financial life is not only when the customer is opening a banking application. It needs to proliferate in the everyday activities. And it's not about what is the best offer of a new product. It needs to become much more into the your financial health, your financial behavior, your financial habits, and focusing on improving literally all aspects of the financial of the customer. So this is only can be driven through this hyper relevance. And also it needs to be exposed into multiple applications, multiple channels, multiple touch points. It goes much more beyond the normal, phone banking application, mobile banking, etc. It needs to be incorporated into other journeys, such as if you think sort of other services in our life are getting incorporated in different applications or different touch points of our life, whether it's a payments journey, retail journey, whether it's normal, social, etc., etc. And to achieve this, there are a few things which needed. One is data, right? And we are seeing a much bigger focus on collecting, managing, and processing large quantities of data, more in the data lake format. So we're getting away from this idea of regulatory data warehouse or regulatory data catalogs, which gives us a very clean regulatory reports. It still exists, but we're now building, and sort of a lot of the sort of forward-looking banks already built this financial services data lakes, which allows you to have robust and very easy access to different types of data and different type of use cases, right? So democratizing the analytics, democratizing this ability to create new insights. The second one is definitely APIs and open banking. And this is the way for us to embed the financial services into any aspect of the journey, into whether you're searching for a property, you were searching for a rent, you're searching for a car, you are doing a normal sort of retail transactions and a payment. We want to make sure we offer the services through APIs to whoever wants to consume them. And being part of this ecosystem, I think, is super critical. So that means APIs and what I call open banking is more about this ecosystem of services which we offer to customers, right, and to third parties. And also, I think the third bit here is sort of this partnerships and integrations with everyone else. So ability to have a meaningful partner ecosystem, which you can share the benefits with and share the monetization with. That's a big thing. So three things. One, fixed fundamentals, and then from the consumer perspective, data and sort of hyper relevance, data, APIs, open banking, open ecosystem, and the partnerships. And if we think about technological foundation for this, it is cloud. We know that this is sort of one of the fundamental principles of the modern infrastructure and platforms, using cloud not just as your container hosting capability, but use cloud and all the in-depth capabilities which cloud providers give you, platform services, sometimes software services. And we've been running with it for a while. For example, we are probably approaching about 10% of our workloads currently running on different cloud providers. And I mean proper public cloud providers, not your sort of rebranded data center type of things. And that's sort of, from my perspective, are the most important things which we're doing.
Thanks a lot, Yuri. A lot of things to think about before even I go on to any of those points. Som, maybe over to you to hear your thoughts as to how Mashreq and just generally your views around how banking may change going forward.
Yeah, thank you, Abbas, and thanks, Yuri. I think a couple of points. One is there has never been a more exciting time in retail banking than now. That's first. The second, I think the customer is driving this change, and customer is in the forefront of all of these, and that is what will sustain and will drive. Third thing, I keep hearing all the time that, legacy bank, banks are not sitting still and waiting for other things to happen. So I think this is a new area for everybody, and the customer is driving the change, and technology is a big enabler. But the technology as it used to run may not be the big enabler. And I think I can share from our Mashreq's experience. We have been at this journey for the last 3 years almost, and the pandemic has only accelerated the adoption. How do I see this, and how should the banks respond? I'm going to answer these two questions. What I see, I think the future will be more different and will rapidly evolve very differently than what we have seen. Most banks had done in the beginning some channel digitization, then onboarding digitization, then the customer experience digitization. I think this is going to go much bigger than this. I feel banking will get embedded in many other things, but for regulators, bank may not be doing banking. Many other people can be part of banking. You already see that in wealth management, in payments, where the producer, distributor, and the custodian are very different kind of entity. But banks will become a very big, trustworthy entity for customers, because the customers will have so many choices and so many options that they will struggle to believe which is the right one, which is the wrong one, and the banks can play a big role. Banking, I believe, will get embedded, and as Yuri mentioned, all the technology development as well as the solutions will make it easier to do. Things that we talked about, personalization, contextualization, will all become very easily doable, and that I think is the important part. The part which is interesting is how do you approach this? And I think traditionally, it is not an automation, it is not a technology, it is not a new product. I think this is a sea change of how banking gets done. And my belief is that it starts from the top. Unless the organization supports and drives it from the top, it's going to take a lot of time for it to get embedded. Second, it is actually a big cultural change. And the cultural change is all the new people who do all the new solutions, experiences, and the journeys come with new skills. These people never used to work in bank. Today, they will become part of the bank. These things cannot be outsourced. You cannot outsource digital to somebody else. You cannot outsource technology to somebody else. You cannot outsource experience. So the employees of banks will become different. And we have seen that. We have a digital studio of more than 150 people. And they have designers, engineers, analysts, data, translators. And this is a new breed of people who need to work together in an agile way to focus on the customer and deliver the experience that they're looking for. I also feel that nobody knows how it will pan out, because this is such a new field that if anybody said that I know exactly what it will happen, So your ability to start the journey, make the adjustments, and be agile is going to be very, very important. But net, technology-driven change, a lot of cultural change, and great exciting times ahead, both for the customer as well as for the banks.
Great, Som. Thank you so much for that. Sunny, give the question, but just picking on two things that Som mentioned. How do we approach this and nobody knows how it will pan out? What are your thoughts on it?
Thank you so much, Abbas. I think I'd like to start by saying, there's no question that there is a massive evolution that is happening. However, it has not started now. I think this started by 2017. If you just look back, we had a number of digital-only banks that had come up on the market. What this period has done is just to accelerate that. And like Som rightly mentioned, I mean, the traditional banks are not sitting idle, and remember, these traditional banks, most of them, they have got, huge budgets, they've got big balance sheets, and they have got investments, funds available that they're now channeling into new platforms. And the landscape has changed completely. So some of the things that are beginning to happen now is to really look at the new platforms. What are the challenges? Because they have not had, no challenges at all. There have been challenges. And what are the traditional banks doing now to overcome those challenges? And I must mention and qualify that not only the traditional banks, even the players that started much earlier than, some of the traditional banks. A few things come up. Number one, there are limited range of products that we are seeing on those platforms today. So if you look at most of the neobanks, if you look at most of the digital banks, and if I may just pause there and mention that, we see about 4 different types of digital banks. We see the ones which are licensed and they are operating as a licensed digital bank. We see the ones that have gone into a partnership with traditional banks, and they're using the license of a traditional bank. We see those ones that have either like a joint venture or a subsidiary, where a traditional bank has acquired or they are running another separate bank. And we've also seen traditional banks beginning to migrate clients onto their digital platforms, just efforts, and they're doing that and migrating, so they're still running under the same brand. Now, these 4 types are all very, very different. The business model is very, very different. But one thing that is common is on most of the digital platforms today, there's still a limitation on the number of products that are available. And the work that is being done with all these investments is to ensure that all the products that are available 100% can be done digitally. We also see when it comes to transactions, there are some transactions that clients today are not able to do. And they have either to call the contact center or they still have to go to the branch. That is another area where every single transaction, whether you are canceling a card, whether you need a liability later, whatever transaction should be available digitally. And it is evolving, it's still under construction. It has not been completely, digitized. And we also see limitation when it comes to personalization. If one goes, in the traditional way, there'll be personalization and segmentation, and many times on the digital platforms, that is not. And it can always be argued, is it required or not required? Should the journey be the same? Should all clients be treated, the same? But personalization is very, very critical. Also see an issue when it comes to communication. Some of the digital platforms today or offerings, you find that you can only communicate through that platform. If you have an issue, there's no one to call, you cannot chat, you cannot be able to have an interface with a human. That is, again, a limitation. And the bigger part as well that we see is that most of the digital banks today, they have not made money. So most of them, the investments have been done. If you look at capitalization, you look at the numbers, they're in billions of dollars, some of them. But when you look at profits, not yet making money. And monetization becomes very, very critical for all the 4 types, because if you cannot be able to make money, either you'll be swallowed or you may have to close. So that is very, very critical. And for us, if I look at Standard Chartered, we are looking at all those areas and beginning to do things differently to take it to the next level.
Great, Sunny. Thank you so much for that. And I'll pick up on making money because I'm a simple-minded individual. And I think I always tell, I mean, you need to see the return on investments and the money which comes through, right? So maybe Tom, let me ask you there are a number of questions coming in the chat, but let me ask you this question. So obviously, retail banking margins are getting a bit challenged. We've talked about different type of technological savvy customers coming in, high costs of doing business for some of the incumbent banks. How do you look at pricing elements in terms of attracting more customers, getting a bigger share of wallet, just more from an economics perspective? How do you see this envisioning in this new reality?
Okay, so a great question and some great comments by Sonu, but I just want to talk about this approach will be very different for a new bank and for an existing bank. For an existing bank, digital brings about a big cost advantage. In Mashreq, I can talk about over the last 3 years, our transformation is cost neutral, which means that it is self-paid for. So you save on operating cost and acquisition cost, and you invest them back in technology and the change. So this thing about that it needs huge investment. Within a period of 3 years or 4 years, you will recover the cost of investment coming primarily from your cost saves. And second, your cost of acquisition, particularly in UAE, but in most countries, is the biggest cost base for retail bank. The cost of acquisition goes through a big change when you operate in a digital kind of environment, though you have new cost of digital marketing and digital processing, but it is far less cheaper. And if you are innovative in the way you interact with customers and you engage them, you can drive some significant cost reductions on that. And the third area is the point that Yuri mentioned, where you're not trying to spend a lot of money reaching out to the client, or the client is spending a lot of effort reaching out to the bank. These two processes get embedded in the transaction or the experience that you're talking about. And that involves both offering the product, the pricing the product, construct of the product. And in all of these three areas, data and technology will help significantly. So take a lending product, for instance. The lending product can now, you don't need to have a 4-year fixed rate, fixed installment loan. You can almost price your loan on a daily, if not monthly, if not daily basis. You can have payment terms change overnight, payment terms change through a transaction. Whereas in the past, to do any of those changes, you need a new contract, you need a new evaluation. So many of those things will change. Take a credit card, for instance. Your pricing could be a function of your credit and your payment behavior and your spend behavior. And all of this were also there in the past, but executing them was very, very difficult. Today, you can execute them very well. So I think on the whole, you have better tools to understand risk and price them. You have better tools to reach customers and give them products that they need, or I'll actually say that the cross-sell is getting changed by cross-buy. That means customers are reaching out to buy things as opposed to you trying to sell them products, because it's both a pull and a push. So I will say that while retail banking has been under pressure from competition and the economic environment for quite some time, primarily because of the interest rate cycle and the interest rate regime that we've been under. But with digital, the cost saves, and being relevant to customer, you're getting new revenue sources and new ways of constructing products and new ways of reaching to the customer. That, I believe, will more than make up for the past. But what will happen, and this is the worry I have, that retail banking as such may not exist, whereas retail banking can get embedded in very many ecosystems or journeys that may emerge.
Sure. No, very interesting thoughts, Tom. Yuri, if I bring you in for the same question, retail banking may not exist as a standalone, but gets embedded in different sides of the ecosystem. That, keeping in mind what we've talked about, how would you potentially end up making the money from customers? Your thoughts, please?
I sort of agree. I want to probably add a bit of a controversial thing into this conversation, is that I actually do believe that retail banking products will not exist either, and in some shape or form. Because if you really think about, and some might disagree with me massively, but if you think about the real thing which we're selling, the idea of a credit card versus a personal loan versus another credit card versus your maybe mortgage is different. It's sort of somewhat artificial. Like, why do I have saving account and term deposit account and checking account? And like, as a retailer, as a consumer, right? I know that I have some money with a bank, which is deposited there. I also know that I have some credit ability, right? I have ability to spend money. And essentially what matters for me as a customer, if we think about it really well, it matters for me, can I afford to buy a particular item on the shop? And also, am I making some, benefits? Okay, am I making some interest on the money which I store with an account? How they're structured? Are they structured in the, saving account, term deposit, or super saver, or whatever it is? I necessarily don't need to know about it, right? And I think from my perspective, I think we'll see, or we should see, an evolution of the traditional concept of the retail banking products going forward, because what we have right now is very convenient for bankers, but it's not very convenient for the customers. Customers have been trained to behave this way, right? And when I actually go and buy something in the shop, when I spend my money, why do I need to decide which credit card do I want to spend it from, or am I taking it from my savings account or credit account? Why can't the bank actually do it for me and then sort of tell me that, Yuri, the best way for you is to split this thing between your credit card and your saving and something else? So I think that's fundamentally, from my perspective, will change the experience. And in this case, where you embed these things, whether you embed it into the an ecosystem offers in the third-party applications, it doesn't matter that much. Right? From my perspective there, if we talk about the distribution versus manufacturing, I also believe that manufacturing concepts need to change at some point of time. And I think that would probably be another sort of trigger of the retail revolution in banking, similar to what we've seen in the retail revolution in the normal retail space. Maybe a little bit of a controversial comment. I don't necessarily see it happening next year or next 2 years. But definitely, the direction-wise, it needs to happen.
Yuri, I didn't expect anything but controversial comments from you, and I'm quite excited that you mentioned that. Sunny, just picking up on what Yuri mentioned, retail banking products may not exist. It's more about money management rather than choosing individual products from a bank's point of view. Your thoughts on that?
I think that they will exist in a different form, not exactly the same form that they're in today, because banking as a platform, I mean, that's the direction where this is going, and we are seeing more and more third-party developers coming in and partnering with banks, bringing in products and services, and these are being developed for banking customers. So it's how do we then come together with all the different partners, and indeed banking itself, like I said, in the current form, in the current products, that will be very, very different. And we know very well open banking, started in the UK, Europe, now Australia, part of the US, and so on. It has had mixed, outcomes. In some of the markets, it has been successful, not overly successful, and in some of the markets, it's been a disaster, and for very, various reasons. But then it still comes back to say, with the current situation where margins have really, really shrunk, how do banks then continue to make money, not only for this year, but in the years to come? I think there are a number of different things that both the short term and medium term and long term we need to think of. Trying to make money from deposits, that is almost zero. In some of the markets now, you have got negative interest rates, and wealth management products become very, very critical. And like mentioned earlier, some of those products are actually not manufactured by banks. Banks are just distributors But they come in and clients, they are able to get them through the banks, and NFI comes in as part of a good income source. Today, we still have a play in that a number of digital banks, they do not have lending products. Some do, but not to a very large extent, and a lot of clients still need their financing, and that still gives a play. But as we go forward, that all is going to change. But one thing that we need to look at as well is that the banks have been transforming. And if you look at the way that they are, reducing on their costs, because the cost-income ratio is, very, very critical a KPI that the banks will continue to look at, and it's really under pressure at the moment, but that is changing. So a number of banks, if you look at, for example, their operations, they're either offshoring to low-cost, territories. In some cases, they are really looking at their branch optimization. They are really looking at what has been really carrying the cost in the traditional way of doing business. And as that cost begins to be smaller, it leaves a play in terms of the margins. But also when you look at investments, most of the banks, some have even put a cap to say 70% of our investments are all going to go into digital initiatives. When you look at marketing, some banks again have said, you know what, up to 75% or 60 or 80, whatever the threshold, everything is going to go into digital, marketing. And that shift, it is actually what has been putting a lot of pressure on some of the, players that are coming on the market that do not have the same kind of muscle. So it is a different business model. We won't continue making money from, the margins that we were in the past. It has to be very different, and the future workforce is critical. Because first, if I can just take less than a minute to talk about this. What has happened over the period is we have people who are tech savvy and have gone onto the market. They know how to develop the equipment, but not so much on how to make the money. And then you have the people who know how to make the money, and now they are coming up. And digital, if you use it as a tool, you can have the most sophisticated digital platform. But if you do not know how to acquire, you do not know how to make money, it will be a nice toy to have, and that's it. It's like you give an AK-47 to somebody who does not know how to operate it. It's the best gun, but you don't know how to use it.
Great. Thank you so much. Look, I'm conscious of time, and we have quite a few things to cover. But I do want to, because there are a couple of questions coming, but just one thing, and just as closing remarks from all three of you individually, in 10 seconds, 10 to 15 seconds, not more than that, what does the bank in 2030 look like? Sunny, first to you.
I think that in 2030, there will be nothing called a digital bank. I think that it will not even come up. There will be no department called digital department or digital head. Banking will really be there as a platform. Every bank will be digital, and that is what it is. Whether it is omni-channel, but every bank will be digital.
Great. Song.
I think banks will get an incredible importance. They will become the trusted partner of the customer. They will be the custodian of all their different accounts, assets, liabilities. They will be an advisor, and they will curate what is possible and information to the customer. Customer will execute banking in very seamless way, but there has to be a person or an entity which is the custodian of all of those, and which advises them in a true sense, and advices used on data. So I think banking will become even more important, but it will not be production and distribution of products.
Sure. Thanks, Tom. Yuri, finally to you, 15 seconds.
So what do you want me to talk about in the last 15 seconds?
So what does the bank in 2030 look like?
I think the bank in 2030 looks like, especially if you think about retail space, right? Forget corporate and such. Actually, maybe corporate as well. I think the bank in 2030 looks like a trusted financial, well, a trusted service which helps you make the right financial elements of your all everyday decisions. And I know it sounds convoluted and complex, but effectively, I think the bank becomes a service, and actually it's a service, right? And I think that's an important thing for the retailer, which is on one side invisible, which doesn't exist in a way of, a mobile banking application, which you go to press the button, but effectively it's embedded into pretty much every component and every element of your life. And if you think about the life in 2030 is mostly digital, I think people actually interact with ecosystems through their device at this stage, unless somebody, or device or a voice assistant or a TV or whatever it is, right? So essentially the banking service, the retail banking service becomes present in pretty much all of the journeys you have during your day or your month or your week, and forms your financial habits or improves your financial habits. All right. And in this case, banks not just participate in manufacturing the right level of, I don't want to use the word advice because it's overloaded in a financial sense, participate in manufacturing the right level of insights, and also provide some services which allow you to manage your money and store your money, but also participate in the experience services. And I think that's the most important thing. There. So that's probably my take. It's maybe a bit more convoluted than I wanted to sound, but that's my 2 cents.
No, that's very helpful. Look, let me take this opportunity. Yuri, Som, Sunny, thank you so much for sharing your insights. I think I've certainly benefited. I'm sure others on the call have as well. So once again, thanks a lot. Gonzalo, over to you.
Thank you, Abbas, and thank you for all the panelists that have shared their vision with us. Just to emphasize that, and I'm glad that the vision that you share with us, it's pretty aligned with the ambient bank, which is actually how we've foreseen in terms of one of the business models that we see in the future. And I'm also glad that we've, almost covered all of the 8 dimensions that Adrian shared with us in the beginning on the connected bank. So I'm really glad that we could cover that. For the next, I would say 10 to 15 minutes, we'll actually, we'll bring up some use cases and some real action that KPMG and Microsoft have been doing on this space. Actually, connected has been our motto on digital transformation, and actually we have been supporting our clients on this journey, on these 8 dimensions that we heard Adrian and our panelists talking in these first sessions. That needs obviously to be activated together in order to assure this full transition to digital. So thanks, Yazar, okay, to be here today. I believe we have some interesting stories to share with all the ones that are present here in this webinar. I think it will be challenging because actually we're just coming from a very, very exciting session with our panelists, but let's do it. I think the first topic I would like to discuss is around what we call the insight-driven strategies and actions. Within our alliance, we have been working together worldwide with the digital transformation journey on major international incumbents and also known banks, supporting in personalized customer journeys, using insights from analytics across the value chain in order to make it faster and better informed decisions. We drive customer engagement and conversations using data science and improving detection and prevent financial fraud, and also using voice technologies for digital servicing models. Yazar, how do you think Microsoft and KPMG, as this global alliance that we have, can actually unlock the real value of data and insights in the future of retail banking?
Sure. I mean, Gonzalo, I will split my answer in 2 pillars. One is just basically 3 suggestions to start harnessing power of data. And some of the speakers have already touched upon them, but maybe to summarize. First of all, banks need to simplify their data estate. They have so many systems and they have so many layers to extract data and analyze them. So number 1, simplification before we move into the use cases. Number two is banks need to establish a data AI center of excellence while making everyone pretty much a data savvy entity by themselves. I mean, today, if you go to LinkedIn, you might have noticed there are Python programming for business managers that are available because that is the skill set. And we as Microsoft, for example, conducted an AI business school with INSEAD, the MBA program for the business managers. I think everybody has to be a bit more tech savvy these days. The last point that I want to recommend focusing on in terms of harnessing the power of some of those use cases from an insights driving perspective is the range. Banks need to look at range of data. Ingesting and linking diverse internal data sets like text documents, tabular data from their core banking kind of, structural environments, time series data, graphics data, geospatial data, and if they are capable, audio and even video data are some of the data sets that they need to look at more and more. But I have to say that is not sufficient in light of some of the challenges the speakers have just mentioned. We need to expand our data universe and we need to enlarge our range to look at maps data, weather data, news data from economic news, social news, political news, sociological news, mobility data about the movement behaviors and patterns of the customers, trends happening, again, economic, political, social trends, and maybe even Wikipedia. So those are the first three things that I just wanted to touch upon: simplification, range, and establishing data governance and making everyone data savvy. Now, Microsoft and KPMG, we have worked on countless cases across the world. Just for the sake of time, I will mention some of them. For example, one of the interesting cases in banking, especially with the surge of digital banks, is dealing with customers that have no credit history. How do you give them a loan when they open a bank account? So with KPMG and our independent software partner, AdviceRobo, we created on our cloud platform an automated psychographic credit score underwriting for their onboarding. Psychographic in the sense that asking questions to the customers to be within a span of 3-4 minutes, analyzing their responses, even how they respond to certain questions. Maybe they spend extra bit of time and getting a psychological profile of their customers and whether these people will be good or bad customers and default their payments. Idea was to identify, in essence, the payment behavior monitoring. And what happened is with that, we were able to, in that customer, increase acceptance rate by 18%, and we rejected best customers that were formally accepted with the new models. And we decreased the default rates by 38% and improved non-performing loan score. So there is real return on investment that has business impact when you use concepts like artificial intelligence, machine learning on very specific banking problems, even though they are seemingly very small areas. Another area where we worked with KPMG was the arrears management, which is a bit of an important topic in banking. How do you predict that a customer will fall into arrears issue and devise strategies? And as time passed by, learn from these strategies implemented elsewhere and apply it sometimes autonomously to the customer's life cycle by giving them automated suggestions so that they do not fall into this arrears management problem was one of the cases we worked on with KPMG. Of course, insights are not only for customers to sell them something more or to onboard them, it's also to protect them, right? For example, in one case, users were tricked into sharing their credentials and falsely enrolled into P2P real-time payment solutions where their assets would be siphoned off through real-time payments. So with one of our partners, independent software partners, we adapted behavioral biometric profiling of the customers. And if their account was hacked, we could identify from the way they navigate across the online or mobile banking app and identify that that is not the real customer, and we would stop that. There is one case we worked on in US where in the first 3 weeks on that one of the top 5 US retail banking customers of Microsoft, we saved $300,000 in 3 weeks once the application was live. You mentioned also, Gonzalo, lastly, to spend a bit of time on the voice technology. We are seeing the usage of voice technologies embedding, for example, call centers with advanced technologies during the call and also after the call. For example, during the call, how can we do a bit of an emotion sensing and depending on the stress level of the customer, in real time, route that customer to better agents, or monitor the compliant language of the customer. Is that within the culture of the bank? Is that within the compliance behavior that we expect from the agents? Or how we can trigger, for example, compliance teams with some of the mistakes that the agent might have made, and that could lead to a serious reputation bang for the customer, especially if that's a very important customer. And also sometimes how to augment with AI the agent in a live manner by giving that person some cues as to how to talk to customer or what to suggest. And also after the call, some of these insights can be used, right? For example, what are some of the emerging topics in that customer conversation? If the call didn't go as planned, can we immediately plan a course of actions? Because you know what banks do is like after the call, you are asked to participate in a survey, but that survey is just collect the data. It doesn't necessarily lead to an immediate action, right? And with one of our customers, for example, also we did an email classification. So voice is the most sophisticated version of it, but you can also look into the emails that your customers send or the posts from social media and analyze what they're complaining in general and come up with risk mitigation strategies as a bank, all thanks to the power of data and artificial intelligence.
Yes, thank you very much. I think it was very insightful, this value added, especially because you emphasize on a wider, this transformation can go beyond improvement of customer experience, like the one actually we have seen recently together on a major global bank, which put in practice its digital customer journey. In this journey, we, as you remember, we have worked with several partners, including Microsoft, to deploy use cases where the overall business and IT strategy set the cornerstones to successfully translate the goals into the digital strategy. Well, we focus on the digital experiences, on digital operations and digital core. Without going into much detail, I would also highlight that, and just relating to what you just mentioned, that there was some I would say, relevance on this project where we actually deliver several capabilities on the credit risk scoring, on consumer loans for fast loan approvals, also creating hybrid journeys, especially on the e-commerce, and also using the open banking PSD2 directive in order to embed it on the credit scoring. But the last but not least, actually, how we used and changed a totally architecture of the bank to be much more open and actually to be very integrated with several partners and in a huge alliance ecosystem. And actually that's what we're seeing on the market, which is compared with less mature peers, high mature retail banks who are investing in disconnected banking capabilities are more likely to successfully engage and also integrate and manage third parties to increase the speed to market, reduce costs, and also mitigate risks and close gaps in terms of capabilities. How does Microsoft actually envision the retail banking role in this future on this wider ecosystem, going from acting as an anchor of the ecosystems to be part of a wider ecosystems? As we currently I would say seeing the open banking models. You want to elaborate a little bit more about this? I would say for the next 5 minutes. I think we are just in the end of the session, unfortunately.
No, I'm conscious of that, but I truly enjoyed all the dialogues. It was really worth the wait. So Gonzalo, look, I mean, I've been in Middle East for 20 years, and in a lot of events, I ask this basic question to the bankers, and the question is like, you know, pick a brand and pick a product of that brand that you like the most. Hardly ever somebody picked up a bank and then said, my mortgage loan, I am in love with that product, right? A bank is a brand and a mortgage loan is a product. The thing is like banks are struggling to become lifestyle partners. I mean, nobody dreams of a mortgage loan, but people dream of a home, right? So what if a bank becomes a lifestyle partner? I think Yuri really touched upon that. So we help these people, our customers, to find the home, buy the home, move into the home, decorate the home, insure the home, maintain the home. So there are a lot of adjacencies around the mortgage loan, and banks, with all the technology and insights they have and the budgets, as Sonny mentioned, banks are, especially the existing large universal banks are large, and we have a lot of large local banks. They have the capacity and the acumen to really embrace those different adjacencies to provide one-stop shop experience to the customer. Not necessarily for every product, but there's a lot of innovation in this product transformation space. Now, the interesting thing is that this concept of open banking, where you create ecosystems to kind of deliver the value to your customer, is where the competition is going to be. And I think banks have a good potential to be the center of attention there. One of the things in Microsoft we are looking at is even a little bit beyond this open banking concept, which I think you alluded to. For example, some of you might have heard, recently as Microsoft, we launched our financial services industry cloud. Before that, we have launched our healthcare cloud. We also launched recently a retail and commerce cloud. We also launched a manufacturing cloud and also a not-for-profit organizations cloud. Now, what I'm envisioning is something like this. Just hear me out there. Let's say a retail entity on our retail cloud creates an ecosystem with suppliers. And for example, one of those suppliers can be Fitbit, that provides wearable device to track your health. And now imagine on the healthcare cloud, we have a hospital or series of hospitals subscribing to the ecosystem of one hospital, where they create and underwrite a policy with an insurance company to say to their customers, if you buy that medical or life insurance and get that Fitbit device, I will monitor and adjust your pricing dynamically. Son was talking about this dynamic pricing, right? Rather than giving one fit everybody. Now, when you combine these ecosystems and imagine that a bank also gives that product, the Fitbit, and the insurance attached to it, and the hospital that works with the insurance company as part of their service through the credit card that they avail to the customer, like the travel insurance, right? You get a credit card and you get a travel insurance. Now, extend this to multiple ecosystems, and as a bank, you orchestrate them and avail that product to the customer. So what happens is, like, the insurance company maintains the health of their customers, so they decrease their claim leakages. Hospitals might be providing value-added service. Retailers are selling their products, and the bank is becoming the lifestyle partner of the customer. So I think we are going to see, not tomorrow, the emergence of ecosystems that are forming a network like a consortium we see in blockchain and really delivering differentiated experience to their customers. That is the direction we are looking at. And I think technically today it's possible. It's more about forming the alliances, consortiums, and making the business case to get the best use for the banks and also the ecosystem members, but most importantly for the customer.
Yazar, thank you very much. Okay, before closing, we would like to share with all a number of key considerations that, from our experience in working with multiple clients worldwide, actually we think that can help retail banks make faster progress on this connected journey. Well, the first one is actually keep close to what your customers want. Basically, the ability to think outside in is key in building a customer-centric business. Ensure that you know and act on what your customers want, need, and value. Keep continually looking up and outside of the organization and industry to ensure alignment with the best customer experience in a day-to-day life, eventually even outside the FS. Do the things in an agile way. Break changes down into specific steps, sequence them and implement. Keep standing back to assess whether the change has been successful in a test and learn approach. It's about a series of small changes that together add up to a significant and impactful transformation. Additionally, building resilience. Take on today's challenge with resilience and determination, and actually be prepared to expect the unexpected, fail fast, and obviously learn along the way by developing a connected enterprise architecture. I think you will find your ability to change the course at speed is significantly enhanced. Keep it human. While embedding new technologies such as AI and automation are likely to be critical in developing more seamless interactions for customers, take into consideration that you also need to keep the experience real. Great organizations, as we see, remain definite by the quality and passion of its people and its sense of purpose. Last but not least, make use of new technologies. Continually look at what new technologies are becoming available that could help you serve customers better or connect your business up more seamlessly. Experiment what opportunities enable available through cloud, machine learning, and advance in data science. Well, thank you all for your presence. I hope this session was very insightful, and I'll hope to see you all soon. And most important, keep all safe. Thank you very much for your time.